Good afternoon, everybody, and welcome to the session. It was hell of a week last week. I really hope that you all have actually made money in the first half of the week. Second half of the week, usually when the market actually goes into your direction, gives you a profit. That's why I tried to give you the message. Try and see, if you have had a great week, stay away from the market if you can. And again, you must have seen that how the drop has happened at the XY. We'll talk a bit about that. There are so many things fundamentally that has happened to instigate that drop. We'll talk a bit about that. I might give you a little bit of a lesson of economics today. Again, if I'm boring you, apologies in advance, but this is something that you might need later on. Let's say in the future, somebody asks you, you're a trader, how does this, impact, this interest rate, etc., and why these banks are falling, and going bankrupt within a week or so. How is it possible? You might be able to actually answer them. Okay, this is, like I said to you, nothing to do with your trading. It's just some sort of a knowledge that you need to have, because since we all are traders, we have to have this knowledge in order to to make a decision which is based on the reality, which is based on the facts. Okay. Again, at the start of this month, if you remember that I did say that to you, there will be a panic coming into the market for the rest of this year. This will be the first month where you will see some sort of a panic happening. Okay. I keep on giving you these sort of signs without actually giving you, a lot of, negative thoughts or anything that I'm thinking is going to happen. I'm trying myself to control. At the same time, I'm sharing my views based on the research. Okay. Now you're going to see that this is just a beginning. I predicted that at the end of last year, that after the Q3, you're going to see that we will be in a proper recession. Okay. This is the first stone that you have seen last week. 2 banks have actually gone bankrupt. Okay. And it's all because of panic. Remember, if you go behind and you research about the fall, you will see that there are so many things that could have actually gone, worse in the past few years, but it didn't. But why now? Because it's all connected. Okay, it's all connected. So I'll go into a bit more detail on this one. Let me just quickly read your messages, and then after that, we talk about the fundamentals, geopolitics, and then dive into the charts. Okay, again, if I'm actually boring you on these ones, you can come back after 5-10 minutes when we'll be in the charts. But again, if you are really, really serious about this business, you need to know all this. Okay. Right. Let's have a look. Jama, good afternoon, Mr. T. Good afternoon, Jama. Hi, Jen again. Thank you very much for your advice every week. It's a great support. Brilliant, Jen again. I'm glad that I'll be able to help all of you in the future as well. Fahan, good afternoon. I hope all is good on your side. Can the Silicon Valley bank event be a global turmoil event? It's just a beginning. Okay, it's just a beginning. I wouldn't say a turmoil, for the whole globe, but you'll see that eventually this is the thing which is going to actually, bring the BRICS economy based on the gold into power. Okay. Again, this is you will see these events happening. Again, if I go back to the crypto, let me just, hold on to this one. When I actually start talking about the geopolitics, I'll touch base on that in detail. Hello, Tay. Thank you for consistently inspiring us to become better traders. Brilliant. Luis, glad to help. Mustafa, good afternoon. All and Mr. T. Thank you, Mustafa. Hello, Robert here was shock share. USD took a hit on Friday after jobs report. Also, banks in the US and UK in the limelight yet again. When our government's going to sort it, Robert, it's probably not under their control anymore. Again, like I said to you, it's the byproduct of, when you're actually coming out of these events like coronavirus, like a pandemic, and then banks started to keep on increasing interest rate. These are the byproducts. You have to face them. But again, things could have been a bit better if the war wasn't here. But again, we are actually dealing with a lot of, macroeconomical factors at the moment all over the world. Rajesh, IT, hope all is well at your end. Yes, Rajesh, thank you very much. Hi, T, good day. Last week was nice. Gold move was clean on structure. Fantastic. Vijay, brilliant. Yes, your advice was perfect to stay away. Brilliant. Farhan, indeed. Again, all of you who are actually, listening and learning at the same time, trust me, you will find yourself a totally different sort of a mindset trader by the time next year, this time. Okay. Good afternoon, Mr. T. Hi, Zohair. Good afternoon. Coming back to DXY judging from the news. Chow will talk about that. Don't worry. I do have two questions. One, is the collapse of SVB have a consequence on the dollar? It could be. It has a big consequence with the USDC. Question is, will the Iranian Saudi economical consequences? Thank you. Yes, Luis will talk about that as well. Again, I was going to touch base on these, geopolitics factors and any pestle factors that could actually impact our financial markets. Okay, so bear with me today. Good afternoon, sir, and wishing you a good trading week ahead to We Trade Waves family. Thank you, Michael. If you assume the fundamental is the cause, then the technical will be the implementation. The hikes managed to bring inflation from 9.1 to 5.6. As there are 3 hikes most likely remaining, the inflation may fall to around 3% in Q2, since the money supply fall from 17 to 1.2% since 2021 till now. Should we treat drop in the dollar as opportunity to buy till the Fed pivot? Ali will talk about it. When we go to the structure, you'll get your answer, but it's a very good way of looking at it. Took a loss on GBP USD sell. Robert, I'm not sure why did you sell in the second half of the week, but if you have done it, it's fine. This is a part of the business. Profits and loss are the part of the business. If you think that me and Alan, we are not incurring some losses, you're mistaken. Loss is a part of this business. Okay. But the main important thing is, if you aggregate by the end of the month or by the end of the week is more loss than the wins, then your strategy is not working. That's what matters. It's a series of trades, not one trade or trade by trade. Okay. James, market reaction have been interesting. Bonds rallied, sending the yield and the dollar lower and risky assets higher. It seems that the market participants are more focused on earning data and the recent bank scares with a sharp deposit decline in the SVB. If people start losing their faith in banks, then the Fed has to think twice whether it can keep on fighting inflation, as higher rates would drive bond prices lower, which in return would deepen the losses. Indeed, James, well said. This could create a spiral in which the Fed would soon have to deal with the banking crisis. That'd be a classic catch-22 situation where the Fed would be feeding inflation by loosening monetary conditions. If they lower the rates but increase the risk of liquidity problems for the banks if they keep on fighting the inflation. That's a big question. Again, like I said to you at the start of this session, it's a byproduct, okay? And I'll touch base on that one a bit more shortly. Market reaction has been interesting. Okay, that's fine. I think that was the duplication of the message. Good day, Mr. T. Trust you. Well, thank you very much, Jason, for confirming. AV good. Last week was amazing. This week, looking for a pound cat sell. What's your opinion, David? I would hold on to that one. Once I go to pound cat, I'll talk to you about that one as well. Boomer from South Africa. Welcome, Boomer. Hi, T. Good afternoon. As per your advice, usually avoid trading when you mention for specific days. Fantastic. And I'm really happy to see that, you guys have listened, because I did tell you that when there is no update from me, when there is no, when I'm telling you that, if you have had a great trades, 4 trades we gave and 4 of them were in profit before the NFP, why to force it? Do you know what I mean? So why do you force, yourself? It's the habit. I understand that. But if you have to do it, that's why I said to you, do not take, if you have made 5%, risk 1% or 2% max. So at least by the end of the week, you will have 3% profit. And that's how you should be always, setting up your mind. Thanks for all your efforts to teach us. I'm looking forward. Fantastic, Danny. How will it affect crypto? Shanti will talk about it. Wish you good health. Thank you. Thank you. If I want to buy Elliott Wave book, which book is good for me, and can share with me the name of that book? Saying I wouldn't buy a book it's a free book. You can go online and read about it. The first 2-3 chapters are the main ones. So I wouldn't recommend buying and spending money on that. Okay, because it's not just that what's written in the book. You'll see that most of the time it won't go as per the book is saying. I'm not saying that it doesn't work at all. But when you combine it with some more systems, that's when the Elliott Wave is worth reading or worth actually implementing. Okay. Good day, Professor T's paradigm shift is about begin after the two banks collapse. Chris, okay, thank you for always imparting your knowledge to us. Fantastic, Chris. I'm glad you guys are actually taking the knowledge, how many trades you take in 1 week. It all depends on how many setups I'm getting. So like for example, last week, I just took one setup, which was dollar yen to the upside. I did tell you all that, 4 trades that I gave it to you. Dollar yen was the first one that I've actually taken. And as soon as it went to the profit 137.5, I was out. So should you. Why to, force yourself? When you have a target in mind, let's say if you have made 5% in one trade, you don't need to force yourself. If you have 4 trades in a month, making you 5%, you are making 20% a month. And that is a crazy percentage. None of the banks in the world would give you that. So try and be calculative when you're actually taking the trades. Do you really think SP 500 will drop lower? What happens to Powell? Whatever it takes, when he was committed to prevent NYC fall into the abyss, looks like inflation is scarier than COVID craziness. Destroying jobs economy will be satisfactory for Powell. What price is he prepared to pay for inflation cool down? Marcia, very good way of thinking about it. We'll talk about this one as well shortly. Guys, I need to wind up the questions now, because if I keep reading the questions, I wouldn't be able to give you my take on that. Okay. Now, firstly, many of you must be hearing about this bank collapse, etc., but none of you, probably some of you, might not know the reason why it has done. Remember, it's always going to be the same, like how we have in the market, supply and demand. Okay. For the banks, it's inflow and outflow. Okay. It's a totally same principle. How much money people are depositing and how much money people are withdrawing. If the balance of this one goes out, what I meant is, like, if the outflow goes more than the inflows, then that's when the bank struggles to maintain. Because it's like this. It's a wake-up call for all of us as well at the same time, that you need to diversify your portfolio. Do not put all your money in one bank. Never do that. Okay. Buy some gold, buy some silver, buy some stocks, and keep the rest of the money in your saving, not in one bank, few different banks. Okay. Because if one bank collapses, like for instance, the same thing happened for the Silicon Valley Bank. What happened is they kept on taking the money as the deposits and they kept on buying the bonds. But Feds, they have keep on increasing the interest rate. Because if they keep doing that, obviously the bond yield that they are actually holding will be keep on dropping. And that's when they will struggle to actually pay back the customers. That's what exactly the same principle happened for the SVB as well. And then the bigger institutional investors, when they pulled their money out, they couldn't have anything to, recover that, on their balance sheet. Okay. And this is the main reason. You need to understand that every single bank in the world works the same way. Just this bank was actually, keep on, working with the tech companies. I did say at the start of this year as well, I'm expecting the tech companies to be hit massively this year. Whether there's going to be the, a paradigm shift in the tech companies, whether it's going to be a cyber attacks this year, whether it's going to be anything. Okay. But these will be the companies hit massively, in this year. Okay. Now, it's all about, again, yes, Ridmo, it's a unrealized losses as well. Okay. Because when you're actually trading, it's the same. Keep that in your mind. If you're trading, if you're not taking the losses, your unrealized losses becomes your drawdown, and it continuously keep on compounding. At one point, you have to take the loss, because otherwise you'll have to put more money in it. Okay. And that's exactly where they struggled, because they were having a black hole for few billions, and they couldn't capture that money from anywhere. Okay. And when you can't do it, the margin cannot keep maintaining. And then that's where, you collapse. And that's where, our trading account goes bust. This is the exact same principle. Okay. I want you to understand that whenever banks like that, they go down, it's not just a one-day process. It's the continuation. It's the, it's the history in the past that they've continuously keep doing the mistakes again and again. And all of a sudden, when you see there is a drop or there is a bankruptcy happening, it's, it's not overnight. Nothing goes overnight, guys. Okay. It's always the continuous process. Now, in terms of the Silvergate, what was that? It was pretty much, you all were saying, out there that after FTX, it will all be under control. It will be regulations. regulators, they will be keeping an eye on these things, but they cannot stop it. Guys, do you remember that I did say that to you? Once Bitcoin taps 25,000, it will drop. If Silvergate wouldn't happen, something else would happen, because it was bound to drop. Structurally, it was ready to do. Okay. And as you remember that, all of you, especially, in these sessions, we predicted that just it needs to tap 25,000. That's all. Okay. Because after that, something will happen. You will see that if it starts to go to the upside as a continuation, something else will come that will drop the Bitcoin further down. Okay. Now, how is it going to impact us? Remember, inflation, unemployment rate, and interest rate, they are all connected. When the Feds are increasing the interest rate, what they are indirectly doing, they are increasing the unemployment rate, because their end result will be to reduce the inflation. Okay. And that is the main. It cannot go one going up and the other one going down. It has to go always, side by side. These are all byproducts of one main product, which is interest rate. Okay. So if we are expecting the interest rate to keep going to the upside, if let's say the Feds will increase the interest rate, it will go to the upside temporarily. But the next week or week after, when we have unemployment rate, if that goes to the upside at the same time, that will drop the dollar again. So what are we doing really if we are trading fundamentals? That's why what we are really doing is we are combining the fundamentals with the technicals in order to make money. Okay. Because if you really think about it, interest rate increase would give the strength to the economy. Increase in the unemployment rate would weaken the economy. So what are we really doing? In one hand, they are actually increasing the interest rate and pushing the dollar up. And the other hand, it's a byproduct of unemployment rate going to the upside, dropping the dollar to the downside. Okay. The one thing that you can actually, take advantage of will be the combination of both. That's what we do in these sessions. Okay. So try and understand that everything is connected. All what you need to do is bring the puzzle pieces together to see what the bigger picture is really, going to happen. It's the de-dollarization. Okay. I'm telling you, it's going to take effects slowly, but gradually. Okay. Because that's the end product. What will do, once you see that few more banks will start to go to the bankruptcy, people will be more panicked. They will start to take their money out from the banks. When they do that, more banks will fall. It's a panic trigger. Okay. And that's when you will see that BRICS have actually brought their currency based on gold. Gold is a commodity. Okay. Everyone knows that. God forbids everything happened and, we go back to the, Stone Age life. One thing that all will be, we all will be using, it's a commodity, gold. That always has been our past. And that is exactly what they are actually basing their BRICS currency on, gold. Okay. Now, would that mean that the gold will be more expensive because they will be buying, right? If that's what they are going to do, they will be dropping the gold first, because then they wanted to buy it at the bulk. At the moment, China is buying gold crazily, okay? Because they're planning something. On top of that, you must have seen that, this is the first time Iran and Saudi Arabia has actually gone into a deal, okay? This is not something small, guys. Now, these two countries, they are actually, not only just on the, political level or economical level, they are actually religiously totally different to each other. Okay. They have their base core being different from each other. And that's what basically the first time they have a deal. It's not small. And China is the main, mediocre in that. Okay. Who brought them both together on the same page. Again, this is not just, something, just came to yesterday. It's the planning behind it, de-dollarization. Okay. So keep that in your mind while you're actually trading. Again, take small risks. When you're in the trade, get in, get out, take profit. If market is actually giving you more, profit, try and play risk-free. Like as soon as you are in 70 to 90 pips profit, move it to break even. Okay. Because that's the most important thing that you need to do for now. Right. I don't want to talk too much about it. It's already 20 minutes, passed on that one. We can keep talking while we are actually in the session, but this is pretty much the bottom line that you're really seeing. Okay. And I've been telling you every single week that guys, get ready for something get ready for other thing every single month when I'm actually doing my more research. Okay. Now, can crypto market go more down? Regardless of whatever happens in the market, whatever the fundamentals are saying, yes, it can. I've been telling you that there's a possibility of Bitcoin going even below 15 grand. Okay. Could it be another bank? Possibly. But if that changes, would we know? Yes, we will. How? From the charts, because charts never lie. Okay. Right. Quickly again, I've got so many messages. Hi, Professor. Glad to be here. Last week was break-even. Friday was. Okay. Is it possible for you to mention about the stop loss area in the analysis? To me, if I do that, that would be a signal. We do not do that. If there is a absolute, risk in the trade, that's when I actually give you that stop loss, like I did you for dollar yen last week. Okay. If you have traded dollar yen to the upside, I gave you that, the stop loss indirectly by saying if it breaks 35 and consolidates, get out. That's when you should have got out. Okay. If, if you're trading, but again, that has turned out to be a very decent trade as a profit for us. Tax still 16,000. Naomi will talk about it. Unrealized losses become realized losses when they have to sell those assets. Correct. And again, don't forget that those people who have their money in these banks, they are only insured for $250,000. Okay. Above that, anything that basically they had in the bank, God knows what's happening to that money. Okay. And that's when you see the panic comes in, because more people will think about it. My money is in the bank. What do I do? That's why diversify your portfolio. Okay. That's the right answer. Anyone looking for a free resource on Elliott Wave, sign up for Elliott Wave International. They have been around 30 years. They cover pattern and correction. Indeed, Robert. Again, if that's what is helping you, go for it. What is our take on the Fed Reserve emergency meeting on Monday? They probably will be actually talking about, again, inflation. We have a CPI. Okay. We might actually be able to see some sort of, moves which we weren't expecting, a move push to the upside, taking everybody out, a push to the downside from CPI, taking everybody out and then pushing back up. So it could be these sort of planning that, especially after the banks collapse, they are really going to think about it. Okay, if we keep on increasing the interest rate, how are we going to actually, are we going to trigger more banks to collapse? Okay, so these sort of things that probably will be discussed in those meetings in the future even. The second largest bank in the world has 40% of unrealized losses. BOA, Ridmo, very well said. Very well said. The latest bank failure is only an ongoing legacy from 1990. Property failure of Freddie Mac and Fannie Mae securities in the 2008 banking crash. No one has been brought to task over it. That is what I meant in my earlier comment about spineless government not sorting it out. Right, Robert. Thank you for explaining. It does make a lot more sense now. Thank you. What you think about Nat Gas? I'm surprised this is not in month-yearly trade, considering to the seasonality charts, lower point of the year is mid-March. Mercia, there's a reason for it. When I go to the chart, I'll explain that. You have a question related to USDC losing peg. What is your view? Rudra, if that will happen, again, I've been always saying to you all that USDC out of, most of these USDT, USDC, BUSD, the USDC is a more stronger compared to the rest. Okay. If that goes and it just gets unpegged with the dollar, it will probably, drop crypto market to the next 70 to 80 billion loss. Okay. I want to learn more about long-term investment in stocks. What's your advice on how to do my research? Jody, we talk about these ones also, in our sessions. I'd say to you that if you are really interested in, putting your money in the stocks, I'd really wait on this one for now, because especially in this time, you'll see that in the future, usually when the dollar is going to the downside, you'll see most of the stocks goes to the upside. Okay. Stock indices goes to the upside, but this time you saw that they were correlated, together. When the dollar was falling last week, all the indices were also falling. Okay. So when you see something like this, that's your trigger. Okay. There is a panic going on in the market. Okay. One of the late great aunties had the right idea. She did not trust banks and kept her money in the national dried milk tins in her bedroom. Robert, that I've seen so many people like that. Probably, by the end of this, this year will probably be, appreciating them by doing that, because that's where you'd see that whatever you have in your hand, that is yours. Right, guys, that was pretty much, I'd have to skip many questions. I really apologize for that, but because if we keep doing that, I wouldn't be able to continue for the rest of this session. Now, last week, as you can see that we had more jobs added to the, to the payroll, but we had the interest rate actually gone up. That's why the dollar started to fall. That probably wouldn't have been the main reason, because if you actually really think about it from the bigger perspective, if the jobs got added, 311K jobs got added compared to what were the forecast that they were expecting, it was way more than that. But the unemployment rate has gone to the upside. And on top of that, the banks collapse. All of it together has basically become the reason for the fall. Okay, not just the NFP. Let me tell you that. Because it must have canceled the effect of this news, one being positive and the other being negative. Okay. Now, Monday, we are expecting nothing but this, the emergency meeting from the Feds. It might be a lot of volatility in the market because of the speculation. There is something of a, we humans, we are actually bound to do some sort of reaction towards this shock. Okay, whether it's a surprise, whether it's a shock, our brain levels, the way we think about things have actually, you'd see that we tend to react differently to these sort of feelings. Okay, and that might be a feeling that we probably see in the dollar on Monday. Okay, but we will cover that in the technical analysis that we do. That on Tuesday, we have a GBP claimant count change. They're expecting this number to go up quite a lot, probably double actually compared to the last actual. If that would be the case, you would expect GBP to become a little bit more stronger. But when I go to the chart, I don't see that happening. I did see that GBP being stronger last week. If you remember on Wednesday, I did say that I'm seeing most of the GBP pairs being stronger, okay, temporarily. Now that temporary, move to the upside has happened. Now I need to see a drop. On Tuesday, again, we have a CPI month on month. Again, we had this 25 basis points increase from the Feds last time. That would be affecting the CPI number. I won't be surprised if this will be 0.4, 0.5%, but it will be pretty much, fluctuating between these two numbers. If this will be 0.5, then you're going to see some more, bullishness coming to the DXY, but it all depends on the structure. Okay, because at the moment, if you look at the structure, both the possibility does exist for a drop after a corrective structure, or if market has already dropped, that will be pushing this to the upside. Once we go to the structure, you'll know that more. Again, for the year-on-year CPI, they're expecting pretty similar trend downwards by 0.4%. We'll see on that one. Again, it could be anything. This is just pure speculation at this point. If you look at the numbers, unemployment rate has gone up. This should drop CPI a little, and by interest rate has been going up anyway. And again, this year so far, we have been seeing that most of the CPI numbers are actually going down due to the increase in the interest rates. Wednesday, we have the core PPI annual budget release from the GBP, core retail sales month on month, Empire State Manufacturing. We might get a surprise in this Empire State Manufacturing Index, PPI month on month retail sales. So this day, Wednesday, we will probably be seeing some sort of a volatility in the market, especially for the dollar pairs. Okay, but we'll cover this one in our technical analysis today. We have a GDP quarter on quarter. They're expecting New Zealand GDP to go down from 2% to negative 0.2%. There must be some sort of a triggers that they must be seeing here. I wouldn't be surprised if this number is actually positive here, and that positive number would actually push New Zealand to the upside. Okay, but once we go to the charts, I'll explain to you how you're going to trade this. Unemployment rate for Oz, unemployment change as well. They're expecting these numbers to be actually going down. Well, in unemployment rate compared to the actual, they're expecting this number to go down. Well, I doubt this one, but we'll see. Okay, but we'll see in this one. It might actually go up rather than going down.
WTW membership, guys, is all-in-one solution for serious traders. You can check all the details on our website. But as soon as you join us, you will get access to the latest WTW Masterclass trading course. And for every chapter, guys, you have summarized course lesson notes. These lesson notes are in different languages: English, Arabic, Spanish, French, Chinese, and Hindi. So even those of you are not too good at English, you can read the notes, guys. You will understand every single part of the video. You will get access to our weekly live sessions. Our weekly live sessions are on every Sunday and Wednesday, and they are conducted by T. And those of you are wondering what we cover during our Sunday live sessions, you can read this part. This is exactly what we cover on every Sunday session. They are very, very important. You will get access to our trades of the week, month, and year, and they will be posted inside your dashboards. You'll get access to our monthly Q&A live sessions. I am doing these live sessions, guys, and the recording will be posted inside your dashboards. Every live session is a lesson. During our last monthly Q&A live session, I have covered liquidity in detail, and the recording, you can find it inside your dashboard. You'll get access to the dashboard as soon as you subscribe to WTW membership. A lot of useful links and tools are included, from position size calculator to economic calendar to market hours, and a lot of tools. And because psychology is very important, we have also a tab, a section inside the dashboard for psychology tips. And trust me on that, some of you might only need one tip, one trading tip. After 3 months from your subscription, or if you go for the yearly membership, you will get all of this: more strategies, double your account in only 3 trades using minimal risk, access to our private trading Slack community, and daily trading room sessions. All of this, guys, is for £115 per month only. And all of us know that you can make more than that in one single trade.